Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:17 p.m. on a cloudy evening here around the New York City, New Jersey waterfront. Um, Today is April 29th. I'm losing track of time, like dates. I lose track of dates, not time. Uh, April 29th, 2018. End of this month here, coming up tomorrow, and May beginning on Tuesday, May 1st. This session will be recorded, uploaded to the Clueless 8 Trading YouTube channel. My typical marketing plug for a quick 30 seconds. The Clueless 8 Trading channel is an extremely valuable resource for existing members, free trial subscribers, as well as anybody out there who has access to the internet. We talk about and we show the real facts about the market, not the fake news and all that garbage that you hear in the financial media. Not that everything is garbage, but most of it is after the fact. What we talk about is before the fact or before it happens. And that is the essence of forecasting, to show the GPS roadmap so that you know where the potholes are, where the ditches are, where the bridges are broken, so that you know how to react when things actually get there. So, Clueless 8 Trading YouTube channel. Everyone needs to go spread the word. Let your friends go in there. Just put in their email address, and they are connected to our free videos. Full disclosure, this is purely for financial education, not for any solicitation or advice. And as the new format goes, as directed by my new marketing directors, I should keep that concise, to the point, which I try to do, within a matter of 30 minutes, maximum 45 minutes, so everyone can listen to the recorded session at their own time, hopefully before the market begins next week. On that note, next week is a huge week. And I really hope, and hope is not really a strategy, but I really plan that this coming week is going to be one of our best weeks. We have big earnings coming out. And just to mention three of them, coming out on Monday morning before the market starts is McDonald's, Mickey D's, our great President Donald Trump's favorite place. And I second that. McDonald's has a great strategy, great menu. Their growth strategy is going terrific. And I hope MCD or McD or whatever you call it, McDonald's, not that I frequent McDonald's much at all, has a blockbuster earnings, because that will help the market overall. Right on the heels of that, we on Tuesday, I believe we have Tuesday or Wednesday, I'm not quite sure. Right up front, we have Tesla, the love-hate relationship. You love Tesla, you hate Tesla. That's exactly what investors are. So the charts are looking good on Tesla. We did extremely well on Tesla on Friday. Not to mention, we had almost a 400 plus intraday reversal and gain on the Tesla Lottos, the April 27 290 calls that went from 40 cents to a high of, actually far more than that, not that I caught the whole thing, of 470. Wow, that's close to that's 900%. 900%. So even if you put $100 in, that means you bought maybe two calls at 40 cents, or two calls at 45 cents, or two calls at 50 cents, let's say. You cleaned out close to $470. How would you like that if somebody walked over to you in the street and said, hey, put in $100 and I'm going to give you $400 back? Well, in many cases, when we play the lottos, especially the Friday lottos on expiration, we do get that type of return. But you cannot put too much money in those type of things, because if it doesn't go, like it didn't go with the Amazon 1620s, the second round of those calls did not do anything. So tonight we're going to talk about sizing, position sizing, not just for lottos, but for overall earnings period and for overall options trades. And I'll try to put in a couple of 2 cents of what I think works. Position sizing is extremely important. Which has, aside from that, we have had a very, very strong week. What you're seeing behind you, ladies and gentlemen, is Chipotle, which I'm going to show you the longer term chart, which you have seen so many times. I was listening to a bunch of really, truly powerful motivational videos on my profession, which is trading, coming from people who have been around for a long time. I don't know how well they do, but they are good in what they say. And one of the things that they said is very simple. You can have the best charts in front of you, you can have the best computers in front of you, you can have a lot of money in trading capital, but you can still not do anything. It's a fact. Because the fact remains that if you don't act and if you're not involved in the game, then you're not going to be there. There's a saying on Wall Street that goes back a long, long time. And in the meantime, behind you, you're looking at the S&P 500 futures, the 15-minute version, which is the trader's roadmap, the ultimate roadmap, as I like to say, because every single level is marked where it can fall, where it can rise. And you're seeing futures are up about 450 right now, 4.50, 4.5 points, handles, okay? As they like to call it on the trading front in Chicago, 4.5 handles, 4 handles, it's up. So coming back to it, that if you don't act, you can't win. So one of the old sayings on Wall Street is, and not just on Wall Street, but this comes back from the Jesse Livermore days, way back there in the earlier parts of many different centuries, hundreds of years ago, okay, was the fact that if you are, there is only a few days in the market or a few weeks in the market where you make the most amount of money. So this video that I was listening to as I was setting up my another 27-inch monitor bought from Amazon at a very cheap price over the weekend, and reorganizing my trading desk, was that if you that if you are not engaged constantly, you just never know. Of course, my charts are pretty clear, so you do know most of the times, but I even never know when we're going to have a 400-point up day or a 600-point up day. I can pretty much tell overall um, that that you can that at least during the day when we open up, if we're going to drop really hard, even those are difficult to fathom. But as a real-time trader, as a real-time service provider and a professional trader, I do let you guys know when we're going to drop really hard. But if you're not involved in the game, and this is so important to every single member, and anybody else out there listening, that if you're not engaged in the game, if you don't have a little bit of money in individual stocks or the SPX or the SPYs or the RUT or the IWM or the QQQ, those are the main indices that we play, right? Then you're never going to catch it. And to be a spectator in a game where substantial gains can be made in a very short period of time, whether it be hours, whether it be days, um, it's a tragedy. And like my famous, not my famous, but that is what I truly believe in. The pain of regret. Oh, I should have, I could have taken that Facebook call from $1.60 to $7, or I could have taken the Chipotle call at $5 or $13, on the in the money type of calls that went to $88. That's like buying a $13 stock and then selling it at 88 overnight. So it doesn't matter what I say or what I show and how many winners that we have. But if you're not in the game, even with a small amount of capital, trading capital, the pain is unbearable. The pain. Mike, can you mute your mic for a quick second, if you don't mind, because there's a lot of background noise coming in. Um, so Bottom line is, it's really simple. You have to be engaged in the battle. And this battle of trading is very rewarding. It's very frustrating at times, and it's very disheartening at times. I know that. I'm a professional trader. I got to make money every single day, which is not possible all the time. I got to make money every single week, which is possible a lot. I got to make money every single month. That is also very possible, because the monies have to be made to pay back our responsibility and do everything that we need to do. So, Mike, before you drown in your mic, can you mute it? Can you just?
I'll turn it off. I'm sorry.
No, that's okay. Don't be sorry. Don't be sorry. Um, it's just that it's difficult for other members. There's a lot of background noise.
Yeah.
All you have to do is, on your computer, go on the right hand corner where it says the date and time. Next to it is your speaker little icon. Click that and just mute it. Okay. So anyway, so that's really what it comes down to, guys. Okay, ladies and gentlemen. Um, I know sometimes, I'm always pushing people in the right way. I have nothing to gain from somebody not doing anything. I have nothing to gain if they do really well, but I have something to gain when they do really well. It gets them confidence, so they need to do what they need to do. So the point is that you guys just got to be engaged. If you're waiting around for that beautiful time when everything is going to be all green and then you can just buy, which happens, but most likely won't happen to you, because you're not going to buy the ultimate depths like Facebook and stuff at 150 that we traded. And we traded Facebook many, many times. Right before earnings, we bought at them at around 155, and bang, gone. Okay? Just close the lower end of the gap. All technical. Now, could Facebook go higher? I have no idea. All I know is the upper gap is still looming. That's around 181. Is it possible? Absolutely. Is it also possible that the lower gap at around 168 is going to be retested? That sure is. But we did it. We did this. We have played this many times. And a bunch of times I just sat and did nothing. And that brings me to my second extremely powerful suggestion for all traders and investors. You do not have to, especially for traders, you do not have to trade every single day. It doesn't mean you can't have small positions in swing trades and individual trades or such, but you don't have to be an active trader every single day. Because the downside of active trading is that and I have been guilty of that too, to let go of things or sell a good position without leaving, or leaving maybe a small amount in there, when the next day it just goes berserk higher. Because when you're watching a pot boil, it seems like it never boils, but when it's starting to boil and you just get out of it, you're leaving those big, big fat gains that are coming right in front of you. It is true of the markets. It is true of the Chipotle type of things. It is true of trading. So you have to have a keen eye on the market, but that I'm doing the job. I'm telling you guys, here's Chipotle at 20, here's Chipotle at 12. Was it worth to just get the heck out of the stock, or just stick with the trade and then buy a little bit before earnings? Like I said, you should. And I've been talking about Chipotle for weeks now. We'll just show the different chart. And this stock has to be highlighted because this shows the power of technical swing charts. And then it goes from 10, 13. It was around $13 at that time. Boom, it opens up at 80. Opens up at 50. See, you sold it at 50. And you let go of those 37 points. Who cares? You still bought it at 13 and sold it at 50. So me talking about all this stuff is meaningless. All right? Unless you guys are in there, you just don't know. So let's talk about sizing. Do you have to go out there? Let's say you have $2,000 that you can trade with, which is a difficult amount of money to trade with in volatile markets because they're going to cost average, this and that. But you still do it. You can still do it. So let's say you bought one call, not necessarily in the money call at 13. Let's say you bought that one at 6, which, by the way, didn't go to 87, but went to about 60. So you bought one call at 6. So you put $600. One call. So if you're not trading earnings in the form of when I call position sizing, you can buy something at $1.20. I do $1.25, $1.40, because I give a range of my top picks on the earnings side. At least 70% of them, 7 out of 10 of them on average, go berserk. Go higher. 3 of them, so let's say you have a basket of 10. This is very important for everyone, okay? And I want to keep this short because my director of marketing has told me to keep it short. So I'll do that. So let's say you have 10 stocks. I'm going to put stocks, okay? That you're playing options on. Earnings, ER, as we call it, earnings. And you want to put you want to put a maximum bet on the table of $1,000. So you buy those 10 and you buy one call each at an average of $100. What's going to happen is this. This is the fact. Of course, the mood of the market has to be good. And the mood of market is overall pretty good. At least the smart money is pretty good. Okay? So 2 of them are going to go up almost 300% on the calls. Okay? 3 of them are going to go up 40%. 2 of them are going to go up 10%. That's as good as nothing because you don't want to play options for 10%. And 4 of them are going to be down 40% or more. So let's do the math here. Okay? 300, 340, 350 minus 40. That's 310% on your $1,000 bet layout because it is betting, right? That's what we do. Markets is a calculated bet. I love the stock market because it is a calculated bet, especially if you are trading tactical charts. And earnings are more of a bet because charts are no charts. They're going to be 50-50. So you just made 310%. So your $1,000 is now $1,310. That's great. What's wrong with it? And if you chose to put in more money in the game, let's say you put $2,000, right? Then you are making I'm sorry, not 1,310%, $1,320. You're making $2,600. That's $600. Now, let's say, for example, you chose to put in a little bit more money in the Chipotle, the O'Reilly Automotive, or the Facebook type of situation. And we have had huge winners. I'm not even going through all of them right now. Microsoft, straight up. Intel, straight up. Doesn't matter what they do during the day. You got to sell the first 15 minutes of that skyrocketing lottery win. I always say that. You got to sell gap opens. So bottom line is that let's say you said, no, I really and this brings me to a very simple point that I want to make. I'm keeping an eye on the clock. So is my director of marketing. Okay, it's 8:36 p.m. What time did I start, guys? I started at around. I started late, so I'm 20 minutes in the game. All right, that's good. So let's say you put it. You said, no, this chart looks great on Chipotle, which it did, and I did say what it was going to do, and I'm going to show you that chart next. So you decided that out of that 1,000, you're going to put you're going to put $500 in Chipotle. Your $500 was going to be approximately, the mathematical term sign, approximately 6,000. Come on, guys. I'm not here to keep on rubbing salt on people's wounds, and people's wounds are not that they lost. People's wounds are that they never were there. Or if you bought in the money and you put $1,300, they eventually went to, oh, this is pretty sick, actually. What did it go to? $1,300 went to what? Can somebody tell me? $1,300. Each call was around $13 to $15. So if you bought one call, that'll be $1,500. 8,700 bucks. Now, I'll be the first one. I'm always straightforward, okay? Most of the times I'm straightforward. I'm pretty much straightforward all the time. 8,700. Did I oh, I know it's going to 87? No. My first sell was right at the open. I'm not going to look at a gift horse in the mouth on a gap open. Always sell gap opens. Always, trying to write with my Logitech mouse here. Always sell gaps. So I say that all the time. And then you can always re-enter. I don't care if you have a cash account, which is less than 25,000, which is the day trading minimum. Say, oh, I can't trade with that. Of course you can. Because for options, whatever you sell from the day before, you can use that money. There's no excuses. So you get in there, always sell gaps. So you sell the first gap. You can always re-enter right there because the candle is expanding. My charts are telling you where they're going to go. Now, this is an options chart. I'm going to show you the real chart in a minute, which you guys, if you're half serious about what you're doing, which I'm sure you guys are because you're listening to me right there on a Sunday evening, then you know where the stock is going. Chipotle is going to 440, 450. That's another 20 points from here. So always sell gaps. So you sell one here, sell here. You can always re-enter. Now you don't have to re-enter the same call at 60. It's crazy. You want to buy the out of the money calls, which I said you should, which was around $4 if I remember, and they went to 16 on Chipotle. This is not rocket science, guys. All right, this is all up to you. So now let's look at the. And by the way, this percentage is not like something that outrageous. We have had bigger percentage returns on small lottos that have gone from 40 cents to $4. Something going from $13 to 88 is simply 575%. Big numbers, guys. Big numbers. You don't get 575% on an overnight trade on flipping a house, unless some Saudi sheik decides to buy your house next to you. All right, like they do in Vancouver, that the Chinese do when they buy these broken down shacks for like $3 million, and they're not even worth 10,000. But aside from that, 575% on an aggressive trade is huge. But we have had bigger runners on Lotos, on Bank of America, on Delta Airlines, on US Steel, on UTX. So now let's take a look at something here. So here's Facebook, just showing you a quick picture, right? So Facebook was right here. The calls were cheap. They were on $1.70 to $2. They went to 7 to 9. So let's do the math here. 2 to 9 is 350%. Not bad for an overnight trade. Closed the gap and did what it needed to do. Now, you didn't have to sit there and be an analyst, as I like to say, and be in a state of paralysis and do nothing. You don't think you could buy? I'm sure you guys can. Okay. 4 calls at 2. 4 calls at 2 is $800. Let's say you said, I just want to play, I just want to make some weekend money, and I want to buy 1 call at 2. That's $200. And if the 200 goes to 0, you're not going to be out on the streets, right? But 200 went to 800 overnight. And God forbid you were a half real trader and you bought 10 calls. And you could buy some corresponding straddle with the cheap puts just in case. So let's say you bought 10 calls at 2. So you put $2,000 on the line. And what I'm going to talk about right next after this is risk. How to quantify risk and play risk. Because if you want to be a trader or an investor, you have to deal with risk. And risk means you don't flip out because you lose $200. So let's say you bought 10 calls, contracts at 2, that's $2,000. You're selling those same at around 8 overnight for 8,000. Whoopee. You think your significant other who's been complaining about you losing money and crappy habits of following clueless A trading and why they're making money and you're just doing stupid things are not going to be impressed and actually give you a hug for a change? And think that you're really something, whether you're a man, woman, or whatever, whoever your significant other is. Okay. $6,000 overnight. I don't think you'd be disappointed. Your confidence in built. You can take 1,000 of those profits and play the next earnings game. You can pick another 1,000 and pick another one of my earnings alerts. And let's say you want to take 50% of this, which is you want to trade 3,000 of this. So if all the 3,000 go to 0, which is highly not likely, given my expertise in picking the type of companies for the earnings trades. Say your 3,000 goes 0, you are still left with $3,000 in your pocket. From an outlay of 2,000, that means you're still up 50% on your money instead of being up 200% in profits. Simple stuff, guys. Simple stuff. This is what you study that they teach you, or they didn't teach you this well, I know for a fact, and other services or trading academy or whatever the places are, and they charge you $7,000, $8,000 to learn this stuff, except they never even give you a chart that you can follow. End of story. So let's take a look at why you should, and I'm going to stick to like some real details here, why you should have been sticking to a game plan on a swing chart. And we're talking about Chipotle. Way too many winners. So it'll take like 2 hours, 3 hours to me to finish the session, and my marketing director would be like, "What are you doing?" Okay. So here's Chipotle on a monthly, which looks so scraggly till I put it together. And you guys have seen this, and my videos have talked about this big time. My videos have talked about this big time. And I don't even go into Ulta Beauty, which I said was going to go to 250, which it did. So here's Chipotle's chart. And this stock is still going higher, technically speaking. Even though I think their menu needs to be changed really like right now. I'm tired of like once in a while when I go there of eating the same, boring menu. So I've been talking about Chipotle all the way from down here. Right here. 247, 250. I see that reversal candle. I said, guys, stick with it. And this is a monthly chart. Okay. So this is each of these candles are 1 month. 1 month. And I've discussed this in my previous videos. So I think it's a literal, forget Greek tragedy. It's a US tragedy, an American tragedy that so many of my members were never in this stock. For what? That they couldn't even buy one call? Even if they decided that, and my members don't have to follow like, oh, he's buying that, so I have to buy that. Buy something way out of the money if you want. Which many of you do, and do very well with it. But people who are not even bothered to be in it, I have nothing to say. You guys are suffering in your own misery. So this massive reversal candle off the 246 level was the first tell. And I wasn't there at 247. We traded this parts. I know we did. But then that news came and the stock gapped open 23 points or 25 points that Mr. Nichols from Taco Bell, one of the best restructuring specialists in America, God bless America, one of the finest restructuring guys. They restructure companies just the way I restructure traders' brains. Hopefully I do. Some I've done very successfully. Many I haven't. So he comes in from Taco Bell. Look at my post from way back there. Scroll down, find it. And I said, he's going to do amazing things for the company. I don't even know if he's going to do amazing things for the company, but it's the expectations that he's going to do. But he's obviously doing something because their sales were up, their growth rate was up. It's doing something. So I said, stay long. And the chart said exactly what it says. And I said we should sell the first block here at 372, except 372 was a distant memory when this massive bullish candle, which is a perfect pattern symmetry, which will eventually end here for a rest stop. Do we ever get back here? I have no idea. But I do know that we're getting to 442, one with the other. And then it's going to be, this is the first level of the cup, which I talked about weeks and weeks ago. There will be a pullback, most probably, back to the 400 level. That's 10%, by the way, once it hits 1042. So if you're just a price watching freak, which has done nothing for you but kept you poor in the doghouse, then you're not going to do anything. I'm going to be shorting that little handle, most probably, but there's powerful momentum behind the stock, so I'll be doing it with smaller amounts of money. So once it creates a handle, most probably it's going to do this. A cup, a handle, and a handle breaks out. That's just the way patterns work. Which brings me to my most important point. Every single member, I don't care how well versed you are in technical analysis or not, go to my YouTube channel, look at the playlist which says Basic Chart Pattern Analysis. Look through that, because in the most simplest terms, I explain all the patterns, the human psychological reaction, or psychological explanations of what happens, and the formations of those patterns. If you don't understand basic chart patterns, then you're not understanding my charts. Even though anybody could understand my charts, because I have big fat arrows telling you when to buy it or sell it. Kids could actually understand my charts because they don't overthink. Adults overthink. And I think everyone here and everyone going to be listening to this video are adults. So we overthink. And overthinking is called analysis paralysis. So that's it. The stock will eventually go to 500 bucks. Now, what's the time frame? This is a monthly chart, so go figure. Probably be next month. End of story. So, at this point, there's not much to say. It's approximately 9 p.m. I got to stick to my 45-minute format. All I got to say is this. Here's a chart of the bigger picture, which I've shown quite a few times. And before I go any further, let me just put it this way. Everything that you need to know about the stock market, about individual stocks that we're trading, is on my real-time Twitter feed. It's a complete waste of time for me to rehash the same things over and over again. Spend 15 to 20 minutes of your time, grab a nice drink, grab a nice lemonade, whatever you do, okay? And just go through it. The more you look at charts, the more they're going to talk to you. The more you look at my charts, i.e. Clueless 8 trading charts, the way they're structured, the more you will understand it. The less you focus on my charts, the worse you will do. That, my friend, is almost guaranteed. I don't guarantee anything because there are no guarantees in the stock market. But that is one thing that I can assure you, you will go wrong if you do not start focusing and trying to understand my tactical charts. You want to get into it really deep? Like I always say, sign up for the advanced coaching sessions, the ACS. I get into it really deep. I spend for 1 hour of session, I charge nothing. What is it, like 50 bucks a session or something like that? It's a joke. Try taking these courses with other services and stuff, and they don't even teach you 1/10 of what I do. And they'll charge you hundreds of dollars, if not thousands. And people do it. So, point is, you want to get into the real level 3 type of stuff where you understand the depth of how the dynamics and the correlations work between all kinds of different indicators and everything. Sign up for the advanced coaching sessions. And if you don't, that's fine. You do what you need to do. It's a free country. Last I checked. So here's a long-term picture of the S&P 500 going back to the depths of 2009 when the S&P 500, and I was at my office on Wall Street at 6:30 in the morning. It was 666, the devil's number. That's where it hit. I was not a trader when I would work on Wall Street. I was on the institutional research and the retail high net worth client management front. I traded, yeah, on the side, but I couldn't trade full time because, And boy, did I know that 66 was the bottom? Absolutely not. But I learned it my way after going through some very powerful sitting with some very powerful people on the basic technical analysis seminars and things that were afforded to us as professionals on Wall Street back in the late 90s, early 2000s. So everything that you hear from me is everything that I've learned on my own using the basic tenets of technical analysis. And I'll tell you one thing, it works. So look at this chart. I said it's a long-term bull flag. Does it look like a bull flag? I even drew it out for you guys. Sure it does. And the bull flag doesn't look like a bull flag if we break below 2520 and hit the bottom at 2400. Can that happen? I believe that will happen by mid-year. That we will hit 2400 from where we are. But first, we're going to hit this level here, which is going to be around that 2750 level, which is going to be formidable resistance. And if you want to get excited at 2750, whoopee, go excited. I don't care. You're probably going to drive your car off the cliff. Because I believe that this thing is a formidable resistance. And I've shown that on my daily charts and my weekly charts. This is a monthly chart. If we break that, boy, we're going to take the high, and the dogmatic shorts and the intermediate shorts are going to be toast, impaled like Vlad the Impaler. And if we break this 2520, I can assure you that we are going to be looking at some levels around 2400, and that means we are going to be down. Once we break the 2520 level, we are going to be down another 100 points, 150 point, 120 points. That is going to be, as you all know by now, one SPX handle, futures handle, roughly 7 Dow handles. That's another 840 points. But this is a monthly chart. Don't expect it to happen right away. In the interim, as earnings season rolls on and these great numbers come, we are heading towards 2750. Is it possible we retest the highs and fail? Absolutely. That's the reason Clueless Day Trading is a tactical trading method where we don't necessarily go hog wild emotionally bullish or stupidly emotionally bearish. We trade the patterns and the levels. So let's take a look at what is in front of us as we come into this week. And that's where I'm going to end the session. This chart is gold because you can trade it all day long. You can buy the SPYs. Talk about position sizing. SPYs, you can buy, let's say 4 SPYs. I'm just picking a number. At 4 contracts of the SPY at, let's say, $1.10. You get this type of move, you're selling them at $2.80. It's a fact, right? And it happens all the time. So if you're selling them at $2.80, I'm just giving you a rough figure, okay? And you bought them at $1.10, you just made yourself 154% on your money. So you put $400. I'm talking small trades. So you put $440, right? That's what it is. $440. Oops, sorry. $440. And you're taking out $1,120. What's there to complain? So excuses galore that I hear from not many, but quite a few traders. Oh, well, I can't trade this and that. You can't bet 400. Just go away. I'm not saying go away from my service. Stick to my service because you learn the real facts about the market. Some people cancel and they say, oh, well, I'm not trading that much. I'm taking a break. As if the market waits around for your break. They don't work around our vacations, okay? But doesn't matter. I said, if you break away from my service, the only thing I'll tell you to hopefully retain you as a valuable member, because I'd like to retain everybody. Okay, is that you're getting completely cut off from the real dynamics of what is really going on. So even if you're not trading, you should be connected, because that measly amount of money that you pay every month, the $70 or the $90 for a platinum member, keeps you posted to the reality of the stock market, which affords so many people so many rewards. So even if you're not trading, why not stay connected and pay that $70 and just say, okay, I want to hear those. I want to be. I want to see the tweets as they come through the day. The precision trade alerts, the charts, the commentary on market analysis. Because you listening to CNBC and try to read through Bloomberg and The Economist and the Financial Times isn't going to mean nothing, because your thoughts and opinions, as I like to say, mean nothing. So stay connected. When you want to trade, you trade. So looking at this chart here, this is where we are right now. Futures are about 450. We're right there. So right now we're looking at basically what we're looking at, if you want to do if you want to do a double bottom, cup, small handle, we broke out of the handle. Now we are in a trading range. That trading range, as you can see here clearly, is between 2677 and around 2654. So roughly about 20 points. That's roughly about 100 plus minus 140 Dow points. Not a big deal. If we break this, and so we can look at it as a large cup with a sideways handle. We can handle 140 Dow points. Yes, it'll affect the Boeings of the world. It'll affect some of the stocks that we trade, but at least you know where you are. If you know where you are, you're never going to die in the market. If you don't know where you are, I hate saying the word die, but you're done. So that's your trading range. So we can fall like this. There's a lot of good news. I put a lot of positive when I had a very busy day. I take care of a bunch of stuff. And then I put up market positive, market positive, market positive. Why? Was I like taking some sort of one big positive hit of some sort of drug? No. I saw it over the weekend. I said, put it out there, because I'm a positive guy. I got to be positive. The obligations I've got to live up to. What are you going to be, a negative guy? Like they say, misery loves company, which seems to be the case for most retail traders. So I saw it. I put it out there. I actually didn't see anything that was negative this weekend. Really. President Trump is doing a great job on the business front. And what he's doing with North Korea, brilliant. With Iran, they're going to squeeze them. They're not going to war with Iran. Neither is Saudi Arabia. Want to war with Iran, just let the Saudis bomb the hell out of them. They're not going to do it. It's the same Muslim countries, like two different sects. It's like the Catholics and the Protestants. So we're going to squeeze them. Sanctions, all kinds of stuff. And they're going to buckle. Most Iranians want to topple the mullahs. Fanaticism sucks in all religions. The mullahs in Iran have to go. There are a lot of moderates in Iran, and they're more Americanized than the Saudis, I'll tell you that. Anybody who lives in Los Angeles knows that every single Iranian living north of Los Angeles, they call it Tehrangeles, is a successful businessman. From Chobani, well, he's a Turk, but the guy who runs Expedia, the guy who put the first rocket close to Mars satellite is an Iranian. Okay? So it's not about the people. It's about the regime. We're tired of hating people, right? I know we all are. So we're not going to bomb the Iranians. We're going to squeeze them. We're going to sanction them. And their own people are going to throw the mullahs out. Because we don't want some bearded guys from any religions. I don't like long beards, by the way, just so you know. Okay? I think too much facial hair is an impediment to your brain. just like the Brooklyn hipsters. So bottom line is, too much religion, no good. Doesn't matter what religion you practice. So that's it. Lots of positive news, guys. We're in a positive earnings environment and we're good to go. Doesn't mean everything's going to be up, but position sizing, like I talked about before, don't go nuts on one thing. Go nuts on several things. 30% of them will work overall. 20% will be up a little bit, and the rest will be down. You still will be up. And this is where we are. So we could fall down here, lose about 27, like about 140 points on the Dow. Don't freak out. Just follow the charts. And God help us if we break above this. That's why this blue arrow is here. We break this, we're going to touch the lower end of the thing at 2,700. And we get some blockbuster earnings. It hasn't finished. It's still going on. And some positive news from geopolitical front, because I think the Trump administration is doing a great job overall dealing with China. The Chinese delegation the American delegation with all the big power, Larry Kudlow and all the, even the hardcore, what's his name? Peter Navarro is there. They're going to sit there for some nice, delicious Beijing duck, Peking duck. They're going to talk. They're going to hammer out something. Read the news that I put over the weekend, what the Chinese government just did, allowing larger foreign ownership. It's working. We're all in this world together. That's why it's called Earth. Okay? And President Trump is not going to start a full-fledged war. I don't like his tweets a lot of the times. I think they're short-sighted, stupid, but that's the way he does business. I'm a New Yorker. I know everything about him. Trust me, I do. Okay? I still have his CFO's number on my old BlackBerry. And I'm not that big shot a guy, but that's from my Wall Street days, when we raised millions of dollars for him for the Atlantic City casinos that went bankrupt. As I've said before in my videos, my clients lost 80% of their money. Trump is a very smart businessman. He's not the type of businessman I'd like to do business with, but he's very smart in what he's doing on the global front. So, saying all that, if we enter the 2,700 level, as I've said, 2,720 is very much on the reach. So 2,700 to 2,720 is roughly 140 more points. See that? 140, 140. Have a great evening. We'll see you next week. ACT. SOA, sitting on your you-know-what, and just watching things and listening to me and seeing all these great ROIs and stuff. It's not going to do anything for you guys. I love you all. Stay involved. Get referrals. Stop being a quitter. God bless you all. Good night.